What's up, everybody? This is Jimmy with Trade Decoded. It is 3:46 in the afternoon on March 6, 2025. More crazy volatility in the market, which is good for day traders as long as you're playing it the right way, which is something we focus on trying to do every day. We had a pretty good day in the community. A lot of green, not a lot of red. I think it's a 6-to-1 ratio or so, wins to losses. Today was super expensive. But if you can get past that, the chart still did what we would hope the chart would do. And if you're interested in trying to find the setups that we use every single day to make money in these types of markets, well, you can find all of that in this book right here. It's called The Art of Naked Trading, and it's very good. You should check it out. But let's go ahead and talk about the trades that we found, and the one that I took ended up being a 37.3% win, and it was a good day. But let's go ahead and take a look at what's going on here. So, leading into the open, as you could see, we were putting in lower highs, lower lows. All that means to me is that I'm ready for puts. Now, when I'm looking for when I should enter my puts, I am looking for a very specific support and resistance level that if we get below, I assume we're going to go to the next one down. That's it. That's all the call put scenario is, guys. So the put scenario on Qs was 493.10. The call scenario on Qs was 495.32. For SPY, very similar lines, but 574.85. If we get below that, we'd be looking for the next line down. And to the upside, 577.36. If we got through that, we'd be hoping for the next line up, which in this case doesn't seem like very much, but it's about a 30-cent move. And as long as we keep that as support, which you'll see in just a couple of minutes we talked about, we were hoping to get all the way up to the next line, which we did, and then some. But let's not get ahead of ourselves. So as we were leading into the open, now something interesting was happening here today. Qs started dropping, and I don't know if you know this or not, but I basically take all of my trades based on the Qs using SPX as my tool of choice. Unless I see Qs going one way and SPY going the other, then, you got to be a little bit smarter than that. But my entry for puts was if the Qs can get below 493.10, I'm expecting them to go down to 492.16. Now, on the opening candle, it happened too quick, so I didn't get in until after this candle closed, which is what you see here. But what's good about that is SPY hadn't started to drop yet. So I got a really good fill up here. And as the Qs came down, it looked like, because of ADD, that we were hoping to get down to the pink line. So I held on. And then this turned into a support level. And then ADD started to print green shortly thereafter. So as I was saying, guys, as long as Qs stay below this resistance and SPY keeps putting in lower highs, I'm aiming for this line down here, which you could see we had an alert on. So we had an alert on the pink line. We had an alert on our futures line. And I said, whichever one hits the beep first is going to be my exit. Well, it was SPY hitting their level. So I took myself out of that trade for a 37.3% win. Some folks held, specifically one woman named Blessed. Blessed, I don't know how long you held it for, but I know that when we pulled back all the way up here, you were still holding. So you were a holding hoper today, and hopefully we helped you find another trade that counterbalanced that loss because we had several opportunities to do so. However, every time we came back down to this line on the Qs, I reminded anybody who was in puts, guys, I wouldn't mess around with that line. Come to find out, it was also a 200-day moving average, which I don't watch, but this line was here since 8:30 this morning, so it's good enough for me. It got tested a whole bunch of times as support. Not something you should really mess with. If it doesn't break soon, it's not going to break, okay? Not now anyway. ADD had already started to move up. Things were not looking good to the downside. So every time we touched it, I reminded whoever, please consider taking your profits. And then we touched it for the last time, and that was it. Not only that, but we broke resistances, and, we had a call line on the Qs. So even if you were conservative and waited for a close above that line on the Qs, ADD was pumping green. It was ready to go. In fact, we were talking about it here. One of my other members, Sly, I ain't hear no bill. You know who I'm talking about. You said, Jimmy, when should we be looking for puts? I said, nowhere near here. That's a lot of momentum to the upside on the Qs. Look at the size of the ADD candles. I said, we're going up, not down. And whether you use that information, I know he didn't take puts, thankfully, but a lot of people took that as a reason to consider calls. Guys, if you got a bias, every new resistance is going to look like a place to buy puts. I know this because I traded that way for a whole year and it sucks. Watch the chart. Okay? The chart will tell you everything you need to know. It doesn't work 100% of the time, but man, if you could just wait for the probabilities to be stacked in your favor, it's much harder to lose. So, higher lows right here, I'm expecting with all this momentum and ADD doing this to at least move up to the next line. So again, on the Qs going from 495.32 to 495.95, that's a pretty good move. That's a 60-cent move. That pays well. Okay? So you enter here, you exit here, but we closed above that line, which means in an uptrend, we're expecting to go up to the next resistance, which we did. And we had some people hold on to these calls here. So then I go into helping them figure out whether they should consider staying in the trade or not. And when I say them, I'm talking to the community, not an individual, because a lot of people are very comfortable and got in before we were looking to get in here. Some got in all the way back here when we broke this resistance, which is fine. There's nothing wrong with that. But what should you do when we get up here? Well, this is like an orange box section. Go look it up on my YouTube video if you want to know, but an area of consolidation. And I said, as long as we hold support above 495.84, with higher lows we're putting in, ADD is not tumbling. I'm expecting us to move up to the next line. That's it. Normal rules. Higher lows, bad for puts. We moved up into consolidation. Usually that continues in the direction that brought it there. ADD wasn't collapsing. Everything about this looked good for the upside. So if you held on, congratulations. You got to squeeze a lot more money out of this trade. Not only that, we ran right up to our next resistance, came back down, and what'd we do? We closed above resistance. We held it as support. It's again, another higher low. In an uptrend, we're expecting this to move up to the next line. Now, why, while we were up here, did we consider taking profits here? Well, I'll tell you why. Number one, SPY was at a resistance line, but more importantly than that, and we recognize this yellow circle here, guys, is where we would have stopped out, okay? So when we close above resistances, they need to become our new stop losses. If we close back below it, we got to get out. The other thing was I had somebody holding on to calls still, and I said to him, you know who you are, ADD is starting to fall off. I would not hold on to these anymore. I personally would not hold on to these anymore because this is a sign that we're going to start pulling back. Not crash, not reverse, but pull back. Where are we going to pull back to? Well, for starters, the first support down. If you're, looking to get into puts, our rule is you want to break the uptrend line and take out the first support. And if there's room to the next support, you could play that. Well, some people took that trade mid-candle. Some people took it because we broke the uptrend line. That's up to you. But ADD was going in our favor. Then we moved up. So some people bought calls here. And what we're hoping for in a move like that is a continuation up to the same resistance we just came from. If it doesn't get there, that equals a lower high. Well, what are lower highs bad for? They're bad for calls. So if you're in calls and we put in a lower high, this is your opportunity to potentially get out with a smaller win or a small loss, right? If you bought down here, you still won, even if you stopped out when you realized that was a lower high. Okay, so now I tell everybody, guys, well, this makes this a lower high, bad for calls. If we don't make it back down to this support, what do we have? I make our community members answer these questions, guys. So I know that what I teach, they're remembering, they're retaining. This is information that helps you make better decisions. I don't give you all the answers every time you ask. I will walk you through the scenarios. This is a lower high. If we don't make it down to the support, we put in a higher low. What does that make it? A wedge. Do we get into trades during wedges? We don't. Why? Because it's a fight between buyers and sellers, and we don't know which way it's going to go or who's going to win. You don't want to be stuck in a trade or getting into a trade in the middle of a fight. Okay? So, what do we wait for? We wait for a close outside of that wedge. If we close to the upside of the wedge, well, we need to know where our next resistance is and take advantage of that move if there's enough room to move. If we close below the wedge, we are looking for our next support down. That becomes our target if you're trying to play the wedge break. And it also helps to know which way ADD is going. Well, while we were coming to the point of this wedge, I let everybody know, hey, I'd be more ready for calls because look over there at ADD. Before we even got out of the wedge, you started printing big green candles. So again, we were in the pinnacle of this wedge and ADD was already printing its second gigantic green candle. Now these are big candles. It's just, I have my charts squished down quite a bit, okay? Guys, this is a good indicator of what is likely to happen. This is just a momentum gauge. You don't want to be buying puts aggressively when ADD is shooting to the upside. Okay? So we're expecting this now to break high. Great. High to where? Well, the first concern is this line of resistance, the most recent lower high that we made on the way down. It's what allowed us to draw the wedge. Okay? So we want to clear that. But with ADD being as green as it was, that's a rite of passage to be a bit more aggressive, in my opinion. Okay, so the market was recovering. Things were starting to look better to the upside. ADD is on a rocket ship. Let's go. Where are we going? Well, we're expecting resistance to fail first and foremost, and we're hoping to get at least to the next resistance up. Hey, and if we make it above that, good stuff. Once again, nice winning trade from line to line, okay? That's a big move. That's a 90-cent move. Big deal. Then we close above that line. So as our rules go, if we close above resistance, it needs to stay as support, and then we hope to go up. I let everybody know if I was in these calls and we closed back below 495, 498.15 on the Qs, I would take myself out of this trade. Now, we struggled up here for a little bit, but right at this point, one candle before, Sticky, I'm talking to you, one of our members was holding on to a trade that he got into at the top. And I said, listen, as long as we stay above that resistance or turned support, we have a chance. ADD was still pushing up until it wasn't. We got a nice red candle here. On the second red candle, I said, Sticky, it's starting to look a little bit sketchy. I don't think I would hold on to those anymore if I were you. That's just me. We already would have stopped out based on my rules, but then I was stopping out while ADD was still seemingly moving up. Now ADD is not seemingly moving up. We're on our second red candle. SPY, Qs are at resistance levels, struggling to move higher. This is more likely to pull back down to support, guys, which was right here on the Qs. This is exactly what we were looking for, 496.59. Some of my people are aggressive traders. They take counter trend trades, and one of our rules for counter trend trades is if you're going to get in at a counter trend trade, we want to get out at the first support we run into. Well, that support was right here based on this wedge line that we drew, and it touched it to the penny. Now, if you're aggressively holding onto these trades or you want to squeeze a little bit more out of them, same rule applies as we were looking for the upside. So as we break resistances, we need them to stay as supports. Same thing with the downside. So if we get down and break through a support, it needs to stay resistance, because if we get back above it, you got to assume it's going to run up to the next resistance, and you don't want to hold through that. So if you got in up here, as long as we stay below this 497.27 line, well, maybe there's more room to the downside. ADD started to get a lot more aggressive. I could see a justification for wanting to hold that trade a little longer. Well, where are we looking to go if that's the case? All the way down to this support right here, where all these guys struggled to move lower before. So you could have held on a little bit longer if you wanted to. We touched that line a couple of times, and then we didn't. But the same rules apply. Since we closed below this support, it needed to stay as resistance. It didn't. This would have been your stopping candle on that trade. And it's a good thing because we ran right back up after that. So at this point, the majority of our community is nice and green. Not everybody, but most of the people. A lot of people are done trading by this time, and that's a beautiful work day, guys. If you could be done trading an hour into the day, 30 minutes into the day, hour and a half into the day, that's a dream job if you ask me, okay? Then we move up. We hit this area of resistance again. we are moving down, we pull back. What is this? Well, this is a lower high. What does that mean? It means we're more likely to break support than it is to hold. Where are we aiming to go? The next support down. This was a beautiful, clean move, again, with ADD, printing red. At the time, all systems go, let's go. We get down here. Now, I have some people who want to hold on to the trade longer. Next line down, we had an alert set right here at this level, because this is where I was hoping it was going to go off of this move. It didn't. We did have people hold on to this. We also had people buy this pullback because we were pulling back to a level of resistance on both charts at the same time with, you bet it, ADD printing red. Okay? So what we have to do, let me make this smaller so I guess show you guys what's going on here. With ADD printing red, in a downtrend. So what we want to do is buy here if you're not already in. This has to be your stop loss in this case, okay? If you're still holding on. And we're aiming for this next line down, which we had an alert at. Right here where these guys struggled to move lower, okay? In fact, they didn't move lower. 494.77. Now, the reason I'm going to stress this out is because when I set beeps on my charts, the reason I do it, or when I say beeps, I mean alerts, is because that becomes where I'm going to get out of my trade. Just like in the morning trade, I had an alert on 2 lines, and if I heard one of those beeps, that was going to be the justification for me to take myself out of the trade. And I'm glad that I did. Well, in this case, everybody who was in this trade, which I wasn't, heard the beep and they got out. And thankfully they did, because 1.5 minutes later, we were $3 higher than that point right there. This was nasty. And if you tried to hold for too long, again, you can't anticipate when these candles are going to come, but this is exactly why I don't hold my trades for very long, guys. I don't know about you, but the market's crazy volatile right now. It's even worse now than it was before. Now, this is great for day traders, but you get caught by these. All right, you've got to be aware that this kind of stuff is happening. These candles are massive. These are 90-cent candles, dollar candles, 70-cent candles, $2 candles. Huge moves, okay? It doesn't look like it because the charts are squished down. These are massive candles, all right? So we pull back. We don't want to touch this with a 10-foot pole. However, put in another lower high. We're looking for a break of support. If we get that support broken, where are we aiming for? This was a good one. All the way down to the support here, okay? All the way down to the support here. This was one of the cleanest trades of the day and the most comfortable trades of the day. Again, I was done for the day, but I had a slew of people take this trade. Again, lower highs, ADD started to trend down again. We're expecting a break of support. We're looking for the next support down, which was all the way down here. That was a big move. I was almost a $3 move. Okay, it was $2.50 straight down almost. Struggled a little bit here, but man, we went right to where we wanted to go. Then we pulled back, kept that as resistance, pull back on both charts, what have yous. But we're looking for the next line down because we closed below this one. We never closed above this one. Perfect. Next line down. If you want to take your profits there, if you got in up here, you were so green, you can afford these little pullbacks on this. Then I had an alert on the pink line from earlier in the day. I said to Steven, if you don't know who Steven is, read my book. I tell you who Steven is. I said, Steven, if we can get through this crazy line, which I would not have held from, because if you remember correctly this morning, it was this area here. So for me, if I was in that trade, and I made everybody clear of this, I wouldn't hold through this line. But to each their own, it's your money, you do what you want to do. If I caught a trade that big, I wouldn't care if I made more money or not. I would care if I lost some of that money. I certainly wouldn't care by making more, okay? That would have been a monster trade. However, not everybody trades like I do, and that's perfectly fine. As long as we stay below resistance, which I told everybody, as long as we stay below 493.10, we should be heading for the pink line at this point. It's another lower high, should break support. And again, I'm getting off the mic here at this time. I wanted to see this happen. Literally stepped off the mic at 12:01. We came back 2 minutes later, and hit the pink line. I know that because I heard the alert, came running back and said, I hope all of you guys made some money on that. If we close below the pink line, we're looking for the next one down, so on and so forth, guys. Every one of these lines was on this chart before 8:30 this morning. There's nothing left to talk about as far as trades go because, well, I'm not there to talk about them. But it was a fantastic day for price action. We want these big moves. We want to take care of them cautiously because things are really expensive. But man, if you can muster up the courage and then have the confidence and the patience required to find the right setups. No trade should ever sneak up on you, ever. No trade. You should be able to find these before they're happening. You should be able to pivot if you're holding on to a trade. Look at all the things that we look for as a reason to get into trades. If they're no longer in your favor, assume that the market is going to make an adjustment or likely start to go against your position. This is how we're trying to maximize our returns. With that said, not every time ADD is going to dump is SPY or Q is going to dump, okay? But it is a good indicator of what is likely to happen, especially if ADD is printing big green candles while you're sitting on support for Qs and SPY. Likewise, if ADD is printing big red candles while you're at a resistance level on Qs and SPY, it's probably not a good place to buy calls or hold on to them for much longer. Momentum is waning. It's falling out of your favor at that point. Pay attention to the charts, guys. It's like a map. It's a treasure map. It tells you where the treasure is, and it tells you where the problems are, where the danger zones are. It's exactly what these lines of support and resistance are for, too. It tells us where the buyers and sellers are. When we reach those lines, we want to, be better informed so we can be prepared to react should we need to. And then we look at other things to determine whether that's a line that we should consider taking profits out at or hold through. All right. And again, all of this stuff is explained right here in this book. So if you'd like to buy the book, it's a really good read. It's not super technical, but it tells you everything you need to know to understand price action in a palatable, understandable way. Okay. Super technical doesn't do well, especially with new traders. It's overwhelming. This book is the exact opposite of that. All right, so we're going to wrap this up. I hope you found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, well, we'd love to have you. There are links down below. And I was told the other day that the link is invalid. Guys, just go add server on Discord if it doesn't work and type in Trading Decoded with no spaces. That should bring you right to where you want to go. All right, and that's pretty much it. So I hope you all had a fantastic day in the markets. Till tomorrow, I love you guys.